Microsoft reported Q4 and full year 2024 earnings on July 30th. Revenue and earnings per share expectations were surpassed, yet the market wasn't satisfied. Quarterly growth of 29% in Microsoft's AI business Azure wasn't enough to keep analysts from questioning their CapEx investment. Fourth quarter revenue was almost 65 billion, or up 4.6% from last quarter and more than 15% from last year. Gross margins were slightly lower to 69.6%. Operating profit was close to 28 billion, up 125 basis points from Q3 and 15% from Q4 2023, giving us an operating profit margin of 43%. The bottom line reported 22 billion, up 44 basis points sequentially and 9.7% annually. Net profit margin is 34%. Microsoft's quarterly revenue shows that net revenue has been growing for the last 9 quarters by 2.5%, gross profits by 2.7%, operating profit by 3.5%, and net income to 3.1%. Steady, scalable growth. Revenue by business unit has Intelligent Cloud in red, Azure and AI primarily, reporting 28.5 billion or 44.1% of revenue. This segment grew by 6.8% from Q3, 19% from last year, and by 3.6% in the last 9 quarters, outpacing the other revenue channels. Productivity and business processes, shown in blue, earned 20.3 billion, up almost 4% sequentially, 11% annually, and 2.3% overall. This segment is 31.4% of total revenue. In yellow, we have more personal computing, generating almost 16 billion or 24.6% of revenue. This is the slowest growing business line, up 2% from last quarter, 14.3% from Q4 2023, and up just 106 basis points overall. Turning to operating profit by segment, we can see that Intelligent Cloud is bringing in 12.9 billion, growing 2.8% quarterly, 22% annually, and 4.3% overall. Productivity and business process in blue earned 10.1 billion, the same as last quarter. I double checked it. It was up 12% year over year and better by 3.8% overall. More personal computing is the lowest margin business of Microsoft. Its operating profit was just 4.9 billion, almost the same as last quarter, but up 5.3% from Q4 2024. It's been growing by 103 basis points these 9 quarters. Let's look at some fundamental valuations. Earnings per share was $2.95, up both quarterly and annually. The street was looking for $2.92. Microsoft's trailing PE is 35.5, where the S&P 500 has a PE of 28.77. The PEG ratio is negative 9.67, as the earnings per share were $2.98 in the starting period, but $2.95 in the ending period. Sales per share improved to $32.81, giving us a price to sales of 12.75 times. Book value was also better at nearly $36. That is a price multiple of 11.6. Cash per share was lower, with CapEx and debt repayment largely as the culprits. Microsoft has a large marketable securities balance. Put with cash, it's $10.11. Choose your multiple of 170 or 41 to price. Microsoft has more than 49 billion in debt, but their assets are 512 billion and equity 268 billion, giving us a debt ratio of 0.1 and 0.18 respectively. Interest coverage is 41.4 times. The liquidity ratios are fine, with current at 1.27, quick at 1.06, and cash was 0.15. Microsoft had a return on assets of 17.2% and return on equity of nearly 33% these past 4 quarters. Return on capital employed was 28% and return on invested capital was 29%. Microsoft has an effective tax rate of 18.2%, giving us a NOPAT of 89 billion and an average debt and equity of 308 billion. Cash flow numbers look good, with operating cash flow of 37.2 billion, investing outflows of nearly 15 billion, primarily due to CapEx. Financing outflows of 23.6 billion came from debt repayment, common stock repurchase, and dividends. Free cash was up 17.6% to 23.3 billion. This is a price to free cash flow multiple of 134. Microsoft paid 75 cents in dividends, yielding 71 basis points. Growth is 10%, and they are paying out 25%. Enterprise value of Microsoft is 3.15 trillion, giving the following multiples: 12.9 times revenue, 26 times EBITDA, 29 times EBIT, and 135 times free cash flow. Microsoft provided guidance for Q1 2025, expecting revenue of 63.8 billion to 64.8 billion. Gross margin will be around 44.3 billion, giving us an EPS of $3.08. That is a forward PE of 35. Key takeaways from the report on the pro side is strong revenue growth, good margins, and lots of cash. Return on assets and return on equity were good for a $3 trillion company. All in all, Microsoft is a solid business. On the con side, we think the PE and enterprise value multiples were too high. We think share price might have gotten away from reality around the AI fervor. Capital expenditure continues, which may be good or bad. Will AI uptake pay off, or is Microsoft betting too aggressively? We shall see. We're giving Microsoft a neutral rating. We have no exposure to this company. Like and subscribe.